Good morning and welcome back to Morning Markets from True Potential, Paul Durrans, Investment Director. Just as a quick reminder this morning, we have the podcast coming up on Friday where we have a Q&A session. So if there are any questions that you think of through today's Morning Market video or any other questions you do have, please filter them into marketing for Friday's podcast. With that, starting with Morning Markets and starting with equity markets, we saw further volatility in equities yesterday. We saw a bit of weakness across global equities after a strong start to the week on Monday. We saw the FTSE 100 outperform but still fall, but by a lesser amount when we compare the returns relative to the US. US equities and technology equities were dragged lower by technology stocks. We did see strength in global government bonds. They rallied and delivered a positive return and really highlighting the importance of being diversified and being exposed to multi-asset. In terms of economic data today, there's two areas that I'll be focusing on: US housing data and business survey data, really to get a sign of whether the cautious tone to the US economy that's been coming through over the recent weeks and been feeding into some of the market volatility is really evident. Starting with US housing data, what we saw is new home sales coming lower than expected. 150,000 less homes were sold during the month of April than what the analysts were expecting. And that was a drop from the previous month of March, where even March's figures were revised lower. So the number of sales is declining. Why is that? Because we're starting to see 30-year fixed mortgage rates really accelerate in terms of the level of interest rate. To provide context to that, over a year ago they were around just above 3%. They're now up to 5.5%. So it makes it more challenging from an affordability perspective, especially at a time where inflation is extremely elevated and eating into people's incomes and making it more harder for people to build up savings. With that, that makes it more challenging for first-time buyers and also the less well-off. So what we're also seeing is the mortgage applications rates actually fall as the level of mortgage interest rates are rising. Furthermore, if we look at inventory levels for homes, they continue to increase. So if inventories are high, i.e. supply is high and demand is falling, then prices may begin to peak. And we've seen US home prices rise dramatically over the last 2 years, up 32%. So the US homeowners have had a real boost to their level of wealth over recent years, and that may be topping off. Really important because homes really do filter into the broader economy. If you think about construction, that's 4% of the US economy. Retail sales, if we look at furniture and business materials, it really does filter into the broader US economy. So we're seeing some softness there. In terms of business survey data, we look at manufacturing and services. On the manufacturing side, the survey data just show that the sector's holding up well, with new orders accelerating and employment continuing to be very, very strong, which should help underpin the US economy. If we look on the services side, a little bit more weakness, especially on sales growth, and really the inflation aspect with higher inputs and output prices really continuing to be a challenge for both manufacturing and services. So the takeaways today are really we are seeing some evidence of the US economy cooling. Not surprising given the strength of the economy over the last 12 to 18 months. Inflation continues to be a problem for policymakers, but employment continues to help underpin broader economic growth. With that, that's everything from me today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.